Hi, Chris Cowher here, NMLS number 39010. And today we're going to talk about preparing to get a mortgage, whether you're actually applying for your mortgage or looking to get pre-approved, and some of the things that you can prepare yourself for ahead of time. The mortgage process is broken up into 4 different categories. They look at your income to see if you can pay for the mortgage, your credit to make sure that your creditworthiness is satisfactory to the lender, your debt to income ratio, meaning can you afford this based upon your income versus your existing debt. And then we take a look at the property, again, to make sure that it's a sound investment and that it's worth the money that you're paying for it, or if you're refinancing, that your property is worth the amount of money versus what you're looking to get out of it. When we talk about income, it's really broken up into 2 different categories. If you're a regular employee that receives a pay stub, the lender is going to look for you to have your W-2 from the last year, as well as a year-to-date pay stub. If you're self-employed, be prepared to provide 2 years of your federal tax return, all pages. That way the lender will get a good idea of a history of what your income looks like. As far as credit goes, you really want to make sure that you have a lender that can review your credit with you. Go over any errors that may be in there, and give yourself some time to get those things fixed. Sometimes they can take a month or 2 to get errors on your credit report fixed. So again, that's an important part to do earlier in the process in case there are any errors. When it comes to your debt to income ratio, you want to be sure that the lender knows about any of the debt that you might have and all of the income that you have coming into the family, so that they're able to do a debt to income ratio. Again, this is to ensure that you can afford or pay for the mortgage. The last thing that may be done, and again, it's not necessary on a pre-approval, but once you find a property, the mortgage lender is going to want to do an appraisal of that property, again, to make sure that the value of the house is in line, and as well, if you're refinancing, that again, you're not borrowing more money than what your house is worth. Important also to remember that a bank appraisal is not necessarily what your house is worth. The definition of a bank appraisal is an opinion of value based upon comparable sales. So that value does need to be supported by other sales within the area. But if you have at least these general things available when you go to apply for your mortgage ahead of time, it'll make the process a lot easier.